Good afternoon, this is Rich Nelson with Allendale. We're going to cover a wrap of comments here. Today's Wednesday, March 31st, 2010. Certainly a very exciting day to speak of. Also, end of the quarter, which may be of interest as well. As far as the outside markets, the crude today had a rallying day, hit up to 83.85. This is actually the highest day since that, pretty much the high we put in near the early part of the year, 83.96. So a good rally here for crude. As far as the effect on corn right now, is certainly very limited. The fact that ethanol is not following that trend on the energy markets right now. While crude and unleaded gas are rallying, we do have problems with the ethanol. Ethanol prices are dropping, and that is actually weighing down on corn right now. One thing we can speak of before we get into the reports and how today's action unfolded, we do have to point out that Joe Victor was invited to speak to CNBC here today. And you can see actually a news clip of that on our homepage, and that's www.allendale-inc.com. So as I said, Joe Victor was invited to speak on CNBC, did a great job as far as providing some nice key facts and information, and we appreciate CNBC for their recognize Allendale as an expert on this issue here. As far as the acreage report, certainly corn picked up about 2.3 million acres, a little less than expected. However, that was kind of balanced by USDA saying, based on these grain stock numbers we got in as of March 1st, that the last quarter usage was disappointing. There's a little bearish effect on corn. On the soybean side, the acreage report also was a little supportive for beans. Hypothetically, they only picked up 647,000 tons of acres, or 647,000 acres. That sounds like it's not too bad, but keep in mind, as we said before, any increase in acres for soybeans must be considered bearish for the big picture. Also, we can point out the quarterly grain stocks were a little disappointing. They imply that usage in the past quarter was maybe not where it should have been here. Wheat numbers, not a big surprise on this end. We did drop wheat as a whole, 5.3 million acres. They did have a little higher number plugged in for spring wheat. As far as some key issues, let's also go into this corn more in depth. Down 9.5 cents today, so certainly closing near the lows. Looks like a bearish trade on the charts, bearish mindset as well. So you have the one issue here is this quarterly grain stocks report saying, you know what, maybe we're going to have to revise some of these old crop numbers we had in mind, revise them up in terms of ending stocks. At the same time, the Buenos Aires Grains Exchange, they added to their corn production estimate down in Argentina from 21.2 to 21. That's where USDA is at right now. The biggest driver of these lower prices today was certainly on soybeans. Why did these beans drop 33 cents in the nearby contract? What's going on with that? To be honest with you, the report actually was not that bearish in terms of providing new information to this market for soybeans. As I said before, we do have an increase plugged in for acres. Everybody knew that, and we are going to have a huge jump in ending stocks for new crop. And to be honest with you, everybody knew that as well here. I don't really find the idea that the quarterly grain stocks report was tremendously bearish on beans. We did have a slightly higher number than expected, but it wasn't the main driver. In our opinion, we're certainly looking at this key driver for today's lower trade was the news that this Argentine strike may be ending here. And that's a key issue here. I just saw a stat here this morning saying that out of those 3 ports, which are being affected right now, that implies about 100,000 to 200,000 tons of grain is not being shipped out each day that strike was going on. So we'll maybe hear some news here maybe by the end of the day, maybe by tomorrow morning on if that strike has ended out there or not. One thing which was interesting to point out, the beans certainly did a good job coming back a little bit on the old crop. As I said, down 33 cents. One thing to point out, take a look at that new crop bean chart. It only closed down 8.5 cents. That's not too bad of a close there for that new crop contract at least. Over on the wheat, down about 21.5 cents. Certainly no good way to portray this as a good market here on the wheat side. As far as news, like we said, we've got a reduction in acres, but we still have some problem with stocks carrying into new crop. And no matter what we do with acres this year, it's not going to change that situation. So simply too much wheat. It's overpriced compared to the rest of the world is still what they're saying here. As far as the acreage math, one thing we've got to point out here is you will hear some other analysts speaking and saying that, you know what, we have a deficit in acres. Somehow we have this big drop in winter wheat acres, and it's not being fulfilled by the slight bump up in corn and beans. One thing we do have to point out is once you look at all the other crops, not just the top 3 crops like everybody looks at, but you look at the other crops. In fact, there's actually 18 separate crops that USDA talks about on this planning report. Once you add all those numbers up, the deficit is only 273,000 acres. In other words, that drop in winter wheat, you know what, it may not go on all the corn and beans, but certainly a good portion of it shifted over to small grains and those issues. So there is not a deficit in acres. Let's keep that in mind here in the coming weeks here. As far as the livestock today, cattle closed up 37 cents. One thing we can speak of there, certainly the hopes that maybe we'll have one last week of cash cattle rebounding maybe this week. Last week we traded $96 cash, and right now we've got 94 bids, 97 asking prices. We do think there's a fair chance that we'll get probably one last week here of higher cash before we make that rebound back to a lower trend here for the cash cattle trade. As far as the feeder cattle, we did have certainly some stronger trade from start to finish on those contracts. We do have to point out that we have two things working for feeders right now. Number one, keep in mind the spring grass season is just opening up. These guys looking out at the pastures, noting that things look very good as far as moisture and very good conditions right now. So we do have backgrounders and those type of cattlemen buying those feeders right now. And at the same time, feedlots are looking at this 10 cent, 9 cent lower corn trade today and saying, you know what, I'd like to play some cattle here too. So that's why we did have a good bounce here on the feeder cattle contracts. Over on the hog side, down 15 cents here for the June contract. We can note that the morning cash hog run, the Iowa, Minnesota, down about $1.39. That was a little bit of a surprise. We did expect that to post a little higher trade, actually, for the morning action here. So as far as hogs, we do have the nearbys still in their nice little uptrend. We will point out that some of the deferreds had some trouble here today, and that was due to this whole corn issue. In other words, if we have a sharp drop in corn prices, that may deter some of these guys from liquidation, and maybe 9 months, 10 months down the road, we'll find a couple extra hogs around that we weren't expecting here. So a lot of action today, a lot of news, a lot of stories. One thing we also came out with, which we'll certainly invite you to call in and find out about, are our updated new crop ending stock projections. We just released those to the brokers here today based on these new numbers we got in for not only demand but certainly for acreage plugged in. And we certainly invite you to call in here at any time here tomorrow, and in fact even might have a few guys around tonight to find out what those new crop ending stock numbers are for corn, soybeans, and wheat, and also what it means to prices here and your operations. So feel free to give us a call here, 1-800-262-7538, and you can reach us also by email, which is research@allendale-inc.com. You can, in fact, just go ahead and send us a quick view on our homepage, and that's allendale-inc.com. This is Rich Nelson. Have a great trading day and a good trading week.